Alright, welcome back to episode 2 of See and Trade Like SEER. So I'm assuming anyone watching this particular video now has obviously watched the first video which I uploaded on my YouTube channel. And if you haven't watched the first video I uploaded on my YouTube channel, I'd advise you pause the video right here and go watch that particular video and come back, because I also gave out some insightful information in that particular video. So in this particular video, what am I going to be teaching? I'm going to be showing you guys how I'm able to read bias and also teaching you guys how to read bias the proper way. So without further ado, let's get straight into the charts. And I'm going to be using a few pairs to give our illustration. The first pair I'm going to be using is going to be DXY, which is known as US dollars. So if you've watched that's for most of you that have actually watched the previous video, which I uploaded on my YouTube channel. If you've watched the previous video, which is on my YouTube channel, you would know by now, and also on this, you know by now that I actually explained how I was able to trade this particular range, and also gave my projection on seeing DXY being bullish all the way into this balanced price range, which is also BPR. That's why my future target, that's why I even stated here, this is going to be my future target. And if you follow me on X, if you do not follow me on X, pause the video right here, go straight to my TikTok account, go to my profile, is right under my bio. You see my TikTok, you see my Twitter account there. Click on it, go to my Twitter, follow me on Twitter, because I also post on Twitter. And I'm planning on starting a community real soon, probably a Telegram community or Discord community. I have not yet concluded on which I'm going to be going for, but for now I'm just going to be giving out free and insightful information to those of you who actually want to be profitable, because bias is one of the most essential elements to becoming a profitable trader. Believe it or not, without bias you're trading blindly. Now, if you follow me on X, you would see on my X account I also gave the projection when price was in this monthly volume imbalance. So this is a gap, a volume imbalance. I'm going to be making more future videos about things like this and explaining more about them, but in this particular video I'm just going to stick with the objective, which is going to be explaining to you guys how I'm able to read and how I'm able to read bias. Now, if you follow me on X, you'd see I gave a projection from this particular level all the way to this buy side liquidity. So this is a buy side liquidity. Buy side liquidity. So this is the short term of buy side liquidity, BSL, buy side liquidity. And also wanted to see price at least reach into this particular BPR, which was my future target. So I'm going to clear all this now, and I'm going to state a few confidences I would like you guys to apply when you're trying to read a bias or you're trying to get a bias. So the first confidence is going to be, you start from the higher time frame. You always prioritize, let me outline it, higher. So you prioritize the higher time frame over the lower time frame, and I'm going to explain more about what I mean by prioritizing the higher time frame over the lower time frame. Now, I come into my charts and I wanted to trade for the month of so we just entered a new month, right? I'm going to also do some backtrack, but let's focus on the new month, which I actually did traded. It was funny that I actually traded what's it called, NFP, and I did not even know I traded NFP on Thursday. It was really funny for me, but I'm going to go there soon. But for now, let's finish up here. So now I wanted to trade for the month of June. What are the things I need to pay attention to? If you've watched the previous video I made, you would get a bit of clarity that you have to know how to use imbalances and liquidity to your advantage. You have to know how to use them properly. So the things I'm going to pay attention to is, number one, what is the trend? What is the trend of the market? This is the first thing I'm going to pay attention to. Are we in a bearish or are we in a bullish trend? We're obviously going higher and we're obviously in a bullish trend. So in order for the bullish trend to be confirmed, we have to get some retracement at some point. Now, retracement into what? This is where imbalance come in place. So what are imbalances? Imbalances, you can say gaps in the market. That's just the simplest way to, you don't have to complicate it. You could just say gaps in the market. Now, how do you identify an imbalance? An imbalance, you can identify it by seeing, now, this is an imbalance. And why is this a valid imbalance? Because it consists of 3 consecutive candles which created a gap. So you can see the wick of this candle failed to close below here, and the wick of this candle failed to close above here. So it created this gap, and creating this gap means price is most likely going to seek value from it. There are many types of imbalances. I do not think I'm going to teach about the types of imbalance in this particular video. Probably my future videos, I'm going to teach you guys the types of imbalances, like all the types of imbalances we have and how to use them and how to understand how to use them, which is very, very important. So now these 3 things, higher time frame over lower time frame, higher time frame over lower time frame, you have to start from the higher time frame. Now I want to trade for the month of June, right? Let's go to the monthly time frame. Now wait, I did not say time frame here. Now so we're going to trade for the month of, let's say we want to trade for the month of July. What are the things you need to pay attention to? You need to pay attention to what? The trend. What is the trend? The trend has been bullish, because I obviously have a bullish projection towards this balanced price range. So the trend is obviously bullish. Check. Now look at how is price reacting to liquidities. We can clearly see price has been respecting sell side liquidities, that is creating sell stops, and doing what we've been disrespecting and or sweeping. You can call it sweeping buy side liquidity, and also not just sweeping buy side liquidity, but we've been closing above the buy side liquidity, because you can obviously see here we closed above, this candle closed above this buy side liquidity. These are things you need to pay attention to. Is there an imbalance we would want to see price at least retrace to? No, there is no imbalance. But what you can do is whenever a new month, you can either a monthly candle, a weekly candle, a daily candle, or even a 4-hour candle is opening, you should always anticipate to see a Judas move. What do I mean by Judas move? What do I mean by Judas move? Judas move is clearly, Judas move, this is the first move. So if you're bullish now, if price is bullish now and a new candle is opening, the Judas move is the low wick. That is the first move, the bearish first move before price continue going higher. That's what the Judas move is. If you're bearish, vice versa, if you're in a bearish trend and you're selling, a new month candle, a new week candle, or a daily candle opens, you would want to see the Judas move buy before it sells. So clearly we're bullish, right? Now I want to see a bearish Judas move to the downside. Where are we going to anticipate on the Judas move reaching into? This is you already have a view on the monthly time frame. What you need to do now is scale to the weekly time frame. You do it step by step. So you scale to the weekly time frame now. Now, what is in the weekly time frame? This is where imbalance, you can actually start looking out for imbalances or liquidity, whatever. But in this case, you look for imbalances because you're expecting price to like have a retracement to the downside. Now, there is a bullish imbalance over here, and we are also anticipating or seeing a Judas move to the downside. What are you obviously going to do? You're obviously going to sell price into this bullish imbalance, and price can either do two things from this particular imbalance. Price can either sell from this imbalance or respect the imbalance and continue the trend. In this case, we closed above the imbalance, which is showing price respecting the imbalance. So how, if I wanted to trade all the way into this particular imbalance, how would I have done it? You can scale to the daily time frame to get an outlook on the daily time frame. So what is the outlook on the daily time frame? You can look for what, if you use other blocks, if you use CISD, you can look for any of those things, but I obviously use imbalances. So what I'm going to do now is see, is there an imbalance here? No, there is no imbalance. Is there a other block there? Yes, there is another block. Do I use other block to trade? No, I do not use other block to trade. So I scale to the 4-hour time frame now. Maybe there would be something on the 4-hour time frame I could have used. Now let's look at the 4-hour time frame. We can clearly see we got all the way up to this particular level. We created a bullish imbalance which got disrespected, and from there price started dropping. Now, after disrespecting this particular imbalance, when an imbalance is disrespected, it's known as an inversion fair value gap. What is an inversion fair value gap? An inversion fair value gap is an imbalance that's been disrespected, obviously. Now we're going to state inversion fair value gap here. So if you're trading inversion fair value gap, it's okay to see price close above the inversion fair value gap. It's actually okay, but what is not okay is to see price come up to this particular liquidity here and sweep this particular liquidity. That is not okay. What you'd want to see is price displacing to the downside after creating this inversion fair value gap. And going back to the monthly time frame now, we clearly know we want to see a bearish Judas move. To the weekly time frame, we clearly know we want to see price reach into the discount bullish fair value gap. Now coming to the 4-hour time frame, we want to see price what displace lower from this inversion fair value gap. So if you traded DXY or you trade DXY, you would obviously sell. Your stop would be above this particular high, and you target the fair value gap, which would have yielded you a 1 to 3 trade, which is quite decent. Okay, let's say you want a better entry. You can scale to the 1-hour time frame. What is on the 1-hour time frame? There is actually nothing here. Price sold. After price like reached this particular high, we had some bearish price action. We came back up, came here, came back up. Now we sold drastically. Why did I say we sold drastically? You can see, you can actually see here. Now this particular level could have been where you traded from, because this level now we created a bullish gap. Most people would have anticipated to see price reach here then continue going higher, but no, we sold and closed below this particular bullish gap, creating what, this is also a buy side, this is also a bearish imbalance. So you can call this a BPR, or you can call this an inversion fair value gap. And what would you do? You anticipate on price reaching into this particular inversion fair value gap. You can, because the gap is huge, you can actually bring your Fibonacci retracement, or you can bring your Fibonacci retracement and you sell from the 50% of the IFVG. Your stop loss would be what? Your stop loss would be where? The stop loss would be at this particular high now, because this is the high of the inversion fair value gap you're selling from. So your stop loss would be at this particular high now. and your target would obviously be the discount bullish weekly fair value gap or imbalance. This would have yielded you a 1 to 5 risk to reward trade, but I do not trade DXY. I only use it as correlation to trading XEU USD. I'm going to go there in a minute, but let's do one more example so you guys will have some clarity on what I'm talking about here. So I'm not going to do another example on this particular pair. Let's go to another pair, which is a forex pair. I'm going to still use a forex pair. So let's go to not Euro USD, but let's go to probably GBP JPY. I need something that is actually clear so you guys would really understand what I'm talking about. Or let's go to Euro USD or GBP JPY, anyone, Euro USD. All these pairs are not really that clear, but it's actually tradable. Let me go to the weekly time frame. Alright, so I'm just going to go to XAU USD. I'm sorry, I'm just going to go to XAU USD. So let's go to the 30-minute time frame first. I want to show you guys all the trades I've taken on XAU USD. I traded this. You can see all the trades I've been taking on XAU USD. There are more. I did not even keep things like this. They're actually way more than this. From this particular level, which was FOMC, I actually called this particular short. I traded this short. I'm going to post a screenshot up here just for comfort, just to show you guys I actually took a short trade from this particular zone. And I'm also going to post a screenshot right over here about the trade I took on NFP without even knowing it was NFP. And if I knew it was NFP, probably would have traded with a bit more equity, but I did not know it was NFP, so I didn't trade with much that day because it was just Thursday. The price action was a bit slow at first in the morning. Then when I came back around, I think it was 1:30 or 2:30. I don't really know the time, but I think it was 1:30. So a really massive move, and I was like, what? Anyways, now let's say I wanted to trade XEU USD. We've been bearish on XEU USD, and how have I been trading XEU USD? Why have I been bearish on XEU USD? You can tell I've been bullish on DXY, so I'm actually using that as a correlation to trading XEU USD. If DXY is bullish, XEU USD is most likely going to be bearish. It's just basic knowledge. Now, from the weekly time frame, let's start from the month of what's it called, FOMC. How did I trade FOMC? Why did I trade FOMC? I was clearly bullish on DXY, and since I was bullish on DXY, I want to see lower price action on NFP. Now this is how you use. This is how, just take your time now and just listen to what I'm about to say, because this is how you use imbalances and liquidities properly, and also use it to your advantage while trading. So many people were actually buying XAUSD during NFP, but I saw there was a weekly gap here. So this was a weekly gap. You scale to the monthly time frame, there was no gap on the monthly time frame. This was the candle we traded. There was no gap on the monthly time frame. Price was obviously running for what? If we're bullish on DXY and we're running for a BPR, price will be running for what on XAUSD? It would either run for, let me state it, price would either run for imbalances. Price would either run for imbalances or run for liquidities. So these are the two things price would either run for: imbalances or liquidities. There's nothing more. Imbalances or liquidities. And price is obviously running for what? This sell side liquidity, because this is a liquidity. This is a sell side liquidity. We already have a projection now on the monthly time frame. We scale to the weekly time frame. Now scaling to the weekly time frame, we can clearly see we've been bearish, and we created what? If you pay close attention, this is why you need to pay close attention when trading. If you pay close attention here, you can clearly see price created a weekly imbalance, and creating this particular weekly imbalance, I anticipated on, and that week was FOMC obviously, I anticipated on seeing price reach into that particular imbalance and selling from that particular imbalance. So how was I able to trade such move? Like, obviously I cannot trade from this particular level and put my stop loss here. I would not even have a decent risk to reward. So how was I able to trade it? I scaled to the daily time frame now. So now on the daily time frame, you can clearly see what there is a gap here. So there is a gap here which price has already like rebalanced. We've already rebalanced this particular gap, not one, we've rebalanced it twice. So we've rebalanced the imbalance twice before rejecting from it. And while rejecting from it, we created a weekly imbalance, which I still anticipate on seeing price reaching to. We now reached into the weekly imbalance before going lower. How did I trade it? You cannot trade from I do not trade from the daily time frame. I would not advise you trade from the daily time frame because you will not get a good risk to reward. There's obviously going to be manipulation before the news. The manipulation was the bullish move, which everyone was buying, and I sold. My stop loss was above this particular high, was at this particular high, I would say. So my first trade stopped me out, and I'm going to explain why that particular trade stopped me out, but the second trade held. So the first trade stopped me out. I saw this particular candle, and we had a bearish move in this particular bullish candle. This bullish candle, we have the bearish move. This was the candle I sold, and I withdraw money out of my equity because I don't even think I'm going to explain that. No, I'm not going to explain that. Anyways, I withdrew some money out of my equity, and the manipulation stopped me out, and I sold immediately before the news. Risking my whole account. That was like an aggressive entry. I risked my whole account because I knew I was like seeing what other people were failing to see. I was seeing what others were failing to actually see. This is why if you see and trade like SEER, it might actually help you, and you can actually be profitable in no time. That's if you're paying attention to certain details. Anyways, sold from this particular imbalance. What did we create now? Now we're on the 4-hour time frame. You could stick here. We created what? Now the trend is bearish. Obviously, we're going to respect bearish imbalance and disrespect the bearish liquidities. So we rebalance this particular imbalance. This is the important high. I'm not going to explain about important high here because that's actually, I'm not even going to say it's a holy grail, but that is also a very important element in trading. Is very, very, very important, but I'm not going to be explaining it in this particular video because I don't want to give out that knowledge yet. I do not want to even give out that information yet. So this is an important high. If you know how to use important highs and important lows, you would know how to flip the proper way. Anyways, this was an important high. We sold to this particular level, created this particular imbalance. Why did I sell from this imbalance? I did not sell from this imbalance. There will be a lot of questions, but I'm not going to still explain it in this particular video because I plan on making more videos. So it's just going to be like explaining in this video, and you'll be forced to watch the next video because I'll be explaining it in the next video, which I'm going to be making. Anyway, sold from this particular imbalance, and I also took a last trade before price started. If you follow me on, I just mistakenly entered. If you follow me on, what have I done? Alright. If you follow me on TikTok, you see, I post all the sales now. I did post all the sales I took, but the buys I did not post the buy. Why did I not post the buy? Because I did not make that much from the buy, and I genuinely did not know that day was NFP. It's crazy because after seeing that kind of move, I went back and I went to Forex Factory and actually checked what was going on, and I figured out, yo, it was NFP, because I thought NFP was normally supposed to be on Friday, not on Thursday. So, anyways, that being said, now after using the charts to, let me give one last illustration before I call it here. In the next video, I'm still going to talk more about buyers, and I'm going to talk more about the confluences you use. But in this particular video, it's just going to be about what I've explained. So we're in a bullish trend, right? We're obviously in a bullish trend and we're buying, right? I'll adjust this here. Price cannot just keep going higher like this. Price can obviously not just keep going higher like this. We have to get some retracements to recharge to recharge or seek value from certain PDRAs before going higher. It might be an inversion fair value gap, it might be a volume imbalance, it might be an opening gap, it might be a fair value gap, it might be whatever. It might be a CISD, it might be a breaker block, it might be another block, it might be anything. So price can obviously not just keep going higher. We need to see some retracement to the downside to seek value from what? To seek value from either an imbalance, either there might be another block here, there might be a CISD there, but in this particular video I'm just going to be talking about imbalances. So seek value from an imbalance, continue going higher, seek value from another imbalance, continue going higher. This is price respecting the imbalance and respecting the trend. Now, if paraventurally price creates a higher high, creates an imbalance, comes back into that imbalance and starts selling, what does this mean? Let's say the imbalance was here, right? Let's say the imbalance was here, right? And we close below this imbalance. We are most likely going to see price claim into that imbalance that it disrespected, which is known as an IFVG, before continuing lower to where sell side liquidities. So these are all sell side liquidities. If you do not know what liquidities are, I'm sorry for you. Anyways, these are all sell side liquidities, these are buy side liquidities and buy side liquidities, right? Price can either do this in an IFVG, close above the IFVG. Price can still do this. That's why I said it's completely okay to see price do it, especially when you're trying to trade an IFVG. What you should pay attention to is the high of the IFVG. Guys, if you're selling an IFVG, that's where your stop loss is supposed to be. Your stop loss is supposed to be at the high of the IFVG. Let's come to XAUSD, for example. Let's look at live price action. Let's go to an IFVG, something that price, I think I've traded an IFVG here. All these were lower entries. You can see 30 minutes, this was a 5-minute entry. Come on there. All right, so now look at this particular inversion fair value gap. So this is an inversion fair value gap. You're not just going to go to the charts, look for a bullish fair value gap and buy from a bullish fair value gap, or look for a bearish fair value gap and sell from a bearish fair value gap. No, you have to understand, you have to have a bias, you have to know the trend first. You have to know what price action is doing. Is it running for imbalance? Is it running for liquidity? Is the new month candle opening? How is it reacting to imbalance? How is it reacting to liquidities? Do not worry. This is not going to be the only YouTube video I'll make explaining this. I would also even explain how to read bias with live price action. So I might make 2 or 3 videos explaining to you guys how to read bias, so you guys could just get full clarity and understanding on how to read and understand bias. Anyways, Now you can clearly see this is an inversion fair value gap. This is just for illustration, and you can see how price did not close above the inversion fair value gap. So this can happen most times, this cannot happen. This can happen most times. Price can close above, price cannot close up. Price will most likely not close above. And for a fair value gap now, okay, let me just give you guys an inspo. Let me just put it out there. Now, for a fair value gap now, how do you know an important high and important low? I just want to teach you guys this. I don't know. I do not even believe most of you would even understand what I mean by important high and important low, even if I explain it. Anyways, so important high and important lows, right? Let's say price creates, I'm going to use this for example, my bad. Price creates a bullish imbalance here, right? Now, in order to see and understand these important highs and important lows I'm talking about, you would want to see price seek value from this fair value gap, close above it. If price rejects, you know what, I'm just going to use live price action, like, to explain what I'm talking about. Now let's go to 1 hour time frame, right? Let's go to the 1 hour time frame now. Now this is an important high. My stop loss is most at times here, but just because I'm posting it, not everyone watching my videos or seeing what I post on social media, like my TikTok accounts, not everybody will understand why my stop loss is actually here. So I do not even post it most of the times. I just like do it the normal way and put my stop loss at the high of what I'm selling from. Now let's say I want to buy from here. Let's say I'm buying from, I need a much clearer example. Come on. Okay, I think I traded an inversion fair value gap here. You can clearly see this is an inversion fair value gap. My stop loss was above here, and I'm not going to be explaining to you guys why my stop loss was here instead of being here, because it's supposed to normally be at the high of the inversion fair value gap. So this is the third candle. This is the third candle that created this bullish fair value gap. This is the third candle that created, I think it was even the 4 hour time frame. I do not even really know the time frame I used. I do not live trade. Okay, so I think, yeah, it could be 1 hour or 30 minutes. Yep, it's the 30-minute time frame I used. The 30-minute time frame I used, and I think my stop loss was here instead of being at this particular high. Why did I put my stop loss here and not this particular high? I'm going to be explaining that in future videos. Don't worry, you guys are going to be profitable by force, by fire. Anyways, I just want to explain what I mean by important highs and important lows, right? So for an important high to be valid, come on, this is the 5 minute. This particular trade was taken on the 5-minute time frame. I can recall that day. Now I don't have YouTube. Now this trade bar, my stop loss was initially at this particular high, but I did not post it. I'm just going to this is going to be the only example I'm going to give. You guys can use this, go to your own chart, because that's the only way you actually learn. You have to go to your own chart and study these things I'm actually sharing. You don't just listen and be like, okay, I understand now. No, you have to go to your chart and actually study. Now price created what? This is a bearish imbalance, right? So we created this bearish imbalance, right? Now after creating this bearish imbalance, we seeked value from it and we rejected. This rejection alone, right? We closed above what? Not just this particular high, but also this particular high. Now closing above this particular high shows me that, okay, closing below, not above. I retract my word. Closing below this particular high, right? Closing below this particular high shows me price is most likely not going to come back to this particular high. So I could either wait when price wants to seek value from an imbalance, I could either wait to see price seek value from the imbalance, either reject or see what price wants to do. Either reject or see what price wants to do from that particular imbalance before getting my entry, right? So price seeks value, reject to the downside, closing below this particular high, closing below this particular high. Now, if I wanted to trade, if I was not on my chart when price seeks value from this imbalance, if I was not on my chart when price seeks value from this imbalance, and probably price just created this particular candle that rejected to the downside, and I was on my chart to trade this particular candle, which is the third candle, what I'll anticipate is a Judas move now. I would want to see price buy but not come for this particular high. I would want to see price buy but not come for this particular high, which would obviously not come from this particular high. And the Judas move would come up, most time reach for this high, most time reach to this high, but not to this particular high. And then I would sell from that particular high, probably with waiting that they call on tier and lot size. I don't know, there's a trend going on TikTok now. I'm just hearing tier lot size, tier better lot size. What's this guy? Michael FX. Yeah, that's his name. Not tier better lot size, a bit tier and lot size. They talk. I don't really know. So, anyways, that's what you do. That's if you want to get. See, let me say 80% of the time, this is how you actually see me flipping 20k to 1 million, 20k to 600k. If you check my TikTok account, you see I've done multiple flips. I've migrated from trading Naira account now. I'm mostly trading dollars account now. And I've taken a lot of trades that I haven't even posted on my TikTok account because I don't really know, and I don't even know how to explain why I haven't posted all those trades on my TikTok account. Most trades I'll just take my profit and forget about posting on my TikTok account. But some I do post, right? You see me like traded I think $50 to above $1,000. If you know how to use this properly, you know how you'll be comfortable because most of the times, why people are scared of taking risks, especially when you have just $100 or you have just $50 in your account and you're scared of taking risks, is because you don't know. It's not just because you do. It's because you don't trust the strategy you're trading and you do not know how to get that perfect sniper entry. Which, if you know how to use important highs and important lows properly, and also know how to read buyers and also know how to see and trade like SEER, you'd be able to like comfortably take that particular risk. And that being said, I think I'm going to be ending the video here. So I'm quite sure I actually gave a lot of information about how you're going to trade buyers properly and how I personally like trade buyers. Maybe not, I didn't give out all the information, but this is just going to be episode 2 of me explaining to you guys how I'm able to read buyers. And I'm also going to make episode 3 consigning buyers, probably episode 4 or maybe just episode 3, and I'll like finish it up there. I'll explain to you guys all the confluences you need to pay attention to, all the confluences you need to like pay attention to, and literally everything. So that being said, I'm going to end the video here. And if you find this video very insightful, please do well to leave a like, leave a comment if you have any questions, and subscribe on the YouTube channel to show support. And also turn on your notifications so you'll be the first person to be you'll be the first person to get notified when I like make a new YouTube video. Thank you for watching.